but it's clear from these results that investors are selling in big numbers in Victoria and in Queensland, and they're also the two states that have had the most punitive rental policies over the same period of time.
That's Nicola McDougall, who is the chair of the Property Investment Professionals of Australia. And there Nicola is talking about what they now know about property investors in Australia. Hello, I'm Kevin Turner and welcome to this week's Realty Talk show. PIPA, an easier way of saying Property Investment Professionals of Australia, have just conducted their 9th annual sentiment survey so as to check the health and the sentiment of the thousands of mum and dad investors who make up the vast majority of the property investment community. There is so much that's changed and the insights are quite revealing. So we're devoting the entire show this week to going over the most important points with Nicola. If this is your first time with us, welcome. You'll find us on all podcast players and through the Southern Cross Oz Stereo Network. If you like the show, I certainly hope you do, hit the subscribe button and help us continue to bring you the best guests. We'll be back in just a moment as Bushy kicks off this week's show with Nicola McDougall.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au. This is Realty Talk, powered by realty.com.au.
Now, it's fair to say that the silent majority of mum and dad property investors like you and I have been under constant assault in recent times and wrongly painted as the greedy villains by the mainstream media, as well as the convenient donkey to pin the tail on by politicians, policymakers, and unfortunately all levels of government. And we've been blamed for all of our housing woes. And they use this as an excuse to deflect blame for their decades of supply neglect by introducing a continuous torrent of quite reactive and often half-baked draconian restrictions on the main suppliers of rental housing in Australia. So what effect is all this having, and how are everyday investors feeling and thinking about property conditions both now and into the future? Well, to answer this, the results of the 9th annual Property Investor Sentiment Survey have just been released by peak industry body, the Property Investment Professionals of Australia, or PIPA. And this survey is Australia's most comprehensive snapshot of the nation's property investment community. So for a special Realty Talk feature, PIPA's chair, Nicola McDougall, joins us again to reveal the outcomes. So welcome back to the Property Hub, Nicola.
Thank you for having me, Bushy. It's always good to be here.
Likewise, love talking property with you because you've got your finger right on the pulse of what's happening around the nation. And I guess, on the tip of everyone's lips and jumping straight into the survey outcomes, what's the sort of headline message that's emerging from this year's survey?
Yeah, this year's survey found that about 12% of investors had sold at least one of their properties in the 12 months to August this year. We had a record number of survey respondents this year as well. And drilling down into that, it was certainly investors selling off in great numbers in Victoria and Queensland over that period as well.
I'm assuming that's going to be stripping potentially thousands of rental properties out of the market, is it?
Oh, certainly. This is the second year. Well, I mean, obviously it's our ninth annual survey, but it's the second year in a row where we've actually drilled down into sort of what investors have been doing with their properties, meaning selling and why they're selling and where they're selling. So last year we had, around about, I think it was 16.7% of investors last year who said that they'd sold in the previous 2 years. Now I'm sitting here a year later going, why did we ask in the previous 2 years? But anyway, so about that sold in the previous 2 years. So last year, our analysis showed that was probably a couple of 100,000 properties that have been removed from the rental market. And we say removed because the majority of people that are buying these properties are not other investors. They are existing homeowners or, first home buyers. And so therefore, if we look at the results again this year, they're kind of worse, I suppose, in that respect, because we just asked, what have you done in the last 12 months? And in the last 12 months, 12.1% said that they'd sold at least one property. And when we're doing the analysis, we always actually use like the biggest data set we all have, which is the census data, but we actually also strip out any social housing that might be in any government housing in there. So it gives you a baseline of around about 2.4 something million rental properties in the nation. So, if you sort of what's 12% of 2.4 million? That's another couple of 100,000 properties. So, we've estimated that over the last 3 years that we've been asking this question in the survey, it's highly likely that we've seen hundreds of thousands of rental properties just been stripped from markets around the nation.
At a time when we can at least afford to do that. And, doing the maths on what you said there, about just under 220,000 dwellings potentially stripped out. And 73% of survey respondents indicating that they've actually sold to homeowners rather than investors, which is pretty scary. But I'd love to sort of dig into what are some of the reasons investors are giving for selling or intending to sell so many of their properties, Nicola.
I think what was really interesting, and then, obviously as our survey becomes more extensive, but also, rolls year to year to year, we're starting to get some really good metrics there. And certainly now that we're actually asking investors, what they're doing and why they're doing it. It was quite profound, the difference to last year, because last year the survey results, the number one reason why investors nationally said that they'd sold a property was to make the most of rising market conditions.
Yep.
Let's be honest, 2021, good year for all of us.
Yep.
At the time last year, when we looked at the results and we went, okay, well that would explain why people have done it, but certainly why a lot of people had sold in Queensland, because that was the number one state by a long way last year. Because as someone who owns a number of properties in Queensland, things hadn't been great before COVID, So that was last year. Now, the big difference with this year was that the number one reason why investors said that they had sold in the previous 12 months was because of increasing, or even the threat of increases of government taxes and levies. The new Victorian land tax was one reason given for that. So that was the number one reason, which is quite different to last year. Number two was actually changing tenancy legislation. So, investors feeling that they've lost control of their asset, rental reforms increasing holding costs. When we're talking about something like that, it might be the implementation of the new rental cap here in Queensland that was implemented retrospectively and caught many investors, myself included, on the hop when at the same time as our mortgage repayments were going through the roof, but we were unable to even put our rent up. So they were the top two. The number three, which I probably thought this year might have been higher up the list, was rising interest rates. It was, look, the top three were all sitting in that 40-something bracket. But yeah, rising interest rates was a reason for 40% of investors for selling their property in the last 12 months. So, those results are in stark contrast, because we asked the same questions last year, right? So we're asking similar things all the time, and you can actually see the sentiment there, right? That, this time last year, investors offloaded because they wanted to make the most of the rising market. I don't even know where the rising market was in the result. I think it was like quite low down, because let's be honest, for half of the last 12 months, the market hasn't actually been that great.
No.
So that's been, really, those metrics, because I'm a data nerd, those metrics are really quite profound. And even having that 1 year comparison that we have now, really showing that shift in investor sentiment that's happened in just a 1 year period.
Well, that sort of lack of control that you talk about due to government intervention, with just under 50% doing it because of governments increasing the taxes, and then 43% from my read on due to the changing legislation, and outranking rising interest rates when the mainstream media, that's all they talk about. You would have expected that to be top of mind, but the fact that it's not is pretty telling. And I think there's, again, digging into the details, is just under 30%. Because of the rental increase limits or caps that are being talked about. So pretty scary numbers there based on those punitive and quite restrictive exercises, Nicola. Moving from there then, did the survey results indicate in a bit more detail who the properties were actually sold to?
Yes, I mean, because we do ask that, and I think it was around about 40% of properties were sold to existing homeowners, and around about 33% sold to first-time buyers. What was really interesting compared to last year was the fact that last year the number of investors who bought those previous investment properties was around about the 33% mark. This year, though, it had dropped to about 24%. So you can actually see in action there the fact that this time last year, investors were more active in the market than they had been during this period. One argument that I often get with this, Bushy, and no doubt will be happening when I'm, representing the industry at various government forums, is people go, well, isn't it good that first-time buyers are buying these properties? And of course, we would say, hell yeah. We believe in property investment, as a strategy to improve your financial future, your financial health. So we say, hell yeah. However, then we often get the argument that, well, if a first-time buyer bought it, well, then that means that their rental property is now available for another person, and look, again, sometimes it's the paucity of data that really makes it difficult to argue against some of these statements, because we don't know, right? We don't know where those first-time buyers have come from. Highly unlikely one would think that most of them would be living in a rental property just by themselves or their partner. Probably more likely they're in a share house. Probably just as likely they're still living at home. Yeah. So this is what, we kind of, as I say, I'm just kind of explaining that I often get this pushback on that data, and I don't know how we will ever overcome that, apart from the fact of understanding, hopefully, where those first-time buyers, if they're saving a deposit, which, as we know, has always been difficult and continues to be difficult, that often means, that they probably have to live at home for a short period of time. I did that myself in 2006. Yeah. Do you know what I mean? This is 2006, and I bought my first property in early 2007, and it was $350,000, which seemed extraordinarily expensive at the time. But I went home to live with my mum for 6 months. Yeah, and I was in my early 30s, so anyway, I just thought I'd say that we always support. It's great to see first-time buyers buying, but then what we're actually seeing is it's almost like a game of homes, where it's those existing homeowners, whether they're upgrading, downgrading, that sort of thing. They're the ones that are predominantly the number one volume of people that are buying these investment properties, which means that they are removed from the rental market.
Well, exactly. What it's telling in really simple terms is that there's, in excess of, or nearly 75% have gone to owner-occupiers or first-home buyers, and there's been almost a third drop in the number of properties that have been sold to investors. So it's clearly the big leakage in terms of, again, reducing that rental stock at a time when it's most needed. So very interesting, and again, I guess, drawing a line around some of the commentary that you've made on the survey that sort of suggests that there's potentially about 265,000 rental properties been removed as a result of last year's survey. So if you put them together, that's a massive exodus that's happening from. And
I think 100%. And I think that those numbers can seem quite ridiculous in a way, or it's certainly scary, but. Everyone's trying to understand why we're in this rental crisis, and no doubt we'll talk a bit more about it on the show, but this has to be certainly one of the reasons. Yeah. There are a number of factors. We didn't get here overnight. It won't be fixed overnight. No. But there are a number of factors that are happening concurrently, and this is certainly one of them.
So from those comments about just how many investors are selling up in some of the states for various reasons, the question is, how many say they will come back and buy another property somewhere else, or will they in fact seek another form of investment? Bushy and Nicola discuss that when we return. This is Realty Talk. Back in just a moment.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote. Realty Talk and your host, Bushy Martin.
Now, I guess of big interest, really, of those who have sold a property, I'd be interested in your thoughts around what proportion have indicated that they'll no longer invest in property.
That was a fair of, you caught me on the hop there, Bushy. I don't know what that number is. Is it around about 12%?
Yeah, it's about just under 13%.
Oh, good. I'm glad, because obviously there's so much data in the survey that I know much of it, but not all of it. And that was a new question actually that we asked this year. So we haven't got a comparison to last year, but we thought it was important to understand that. You know, if you've sold a property, are you ever got an investment property? Are you ever going to buy one ever again? And nearly 13% have said, well, no. Yeah. You know, and that flows into, as we were chatting before the show, the vast reduction in the normal inflow of investors that's happened since 2015, and clearly, look, you know, as we get more data on this, we'll have a better understanding of it. But that's part of the problem as well. We haven't had those normal inflows of investors adding to stock that we normally would, prior to 2015.
Exactly. And if the perception out there is that it's just too hard to invest in property when mum and dad investors like you and I are doing the heavy lifting in that space, and will continue to do in reality, despite, you know, the recent government initiatives, we'll still be carrying the majority of the load. So pretty interesting on that front. Now, something I wouldn't mind giving a bit of a feel from is any major differences in the percentage of properties being sold between and across the states and territories, do you know?
What was interesting this year, and again, you know, we do the survey does adapt and evolve. So last year we kind of just asked them, you know, for the state that they sold in, whereas this year we actually drilled down into whether it was a capital city or regional area. So in regards to the state-based results, you know, compared to last year, Queensland was still number one, just a smidge under 40% of investors said that they'd sold at least one investment property in the previous 12 months. And then we had Victoria as well. I think that was in the early 30% mark, and quite a big sort of gap between Victoria and Queensland over here, and then it dropped down. I think New South Wales was number 3. But what's interesting, you know, and you'd think, well, New South Wales, it's our biggest state, has the most people. You would think that, you know, if we're talking about, you know, what's the volume of investment properties that are normally sold, well, we're creating a data set to understand that as we speak. But you would think that just because of population and things, that New South Wales would be, you know, higher up the list. But it's clear from these results that investors are selling in big numbers in Victoria and in Queensland, and they're also the two states that have had the most punitive rental policies over the same period of time. Bearing in mind that this time last year, Bushy, when we were talking, we still had the Queensland interstate land tax, which had been implemented when we did the survey, however, was axed 6 days after the survey was released. So, you know, perhaps another indicator that investors are voting with their feet in these states where they feel that they are being penalised, God forbid, for owning one investment property, so they don't have to rely on the pension in retirement. When it came to capital city, and this is new data, it was actually Melbourne was the number one city location where investors had sold in the previous 12 months, and Brisbane was number 2. Yep. Number 3 was regional Queensland. So again, you know, we've got those bookends there of, you know, this is where people are selling, and we've already spoken about in the show the reasons why they're selling. And then when you look at the fact that, you know, the number one place where people have sold is a capital city is Melbourne, number 2 is Brisbane, and then the number one reason why people are selling, number 1 and 2 reasons are increasing government taxes or threatening of increasing taxes, and also changing tenancy legislation. Well, it's fairly simple to work out what's happening there.
Absolutely. And I think what really reinforces that in very stark terms is that, you know, nearly a quarter of investors are sold in Melbourne and nearly a quarter in Brisbane. But if you then look at the other capital cities, it's only just under 9% in Sydney, just under 6% in Adelaide, a bit over 6% in Perth, and only a bit over 3% in Canberra. Well, that's really reinforcing your conclusions there around the restrictive measures and potential cost increases that are being imposed by those state governments. So some pretty clear messages there. Sort of shifting to a more positive note now, Nicola, given the sort of some of the exercises coming out of there, which states are investors feeling most welcome on the ranking basis that came out of the survey? Do you know?
Yeah, so this was a new question that we asked as well, and you can interpret the data a few different ways, which made the analysis a little tricky. However, with our survey respondents, it was ranked from 1 being the most accommodating state to 8 being the least accommodating, and if we're looking at the results, the highest percentage of survey respondents that gave a location of 1 was actually for South Australia, but from this. So it was a bit difficult to actually, extrapolate the data, but we certainly are starting to sort of see those states where things haven't changed a lot. Probably also when we think about the least accommodating, the most accommodating, clearly this is a sentiment survey, but often it's a reflection of perhaps if the market's been really good there over the time, and certainly South Australia is that way. New South Wales obviously featured very well in these results too. ACT was fairly down the list though, from memory of one of the least accommodating states. And I know this is supposed to be optimistic and positive, and it is, but a lot of the results certainly reflect the fact that these, the markets that are seen as the most accommodating are the markets that are probably performing quite well at the moment. There haven't been massive policy shifts. Investors clearly feel welcome there. By far and away, the least accommodating state was Victoria, with I think it was about 57% of respondents giving that an 8, with 8 being the least accommodating. Interestingly, nearly a quarter of survey respondents gave Queensland a 7. So, so we could, again, it is a Queensland. And if we're talking about tales of woe, or, the fact that investors are selling in great numbers in these states, every single metric that came out of the survey are pinpointing that time and time again. And clearly also investors are saying, we're selling in these places because we don't feel welcome.
Absolutely. And I think the big message for state governments there is that, the intentions are indications of future action. And let's face it, the land tax exercise is a big part of state government budgets. So there's a big message there for, Victoria in particular, and ACT as well, and to some degree Queensland, that they need to wake up to themselves, because one thing that is really clear in the work that we do across the industry is that investors are much more borderless than they've ever been in the past due to the technology increases and the ability to get much more information about areas beyond your local backyard. So I think there's a pretty clear flow-on message that's going to impact on those states if they don't wake up to those trends that are clearly emerging. And speaking about trends, what are some of the challenges or concerns that came out of the survey that investors are facing right now, Nicola?
Do you know what was interesting? Well, in a way, it's kind of a little scary. We really need to talk about more positive stuff, I suppose. But last year, we asked investors about their intentions to sell in the 12 months ahead. And about 19% said that they were considering selling. As we talked about at the start of the show, 12% actually went ahead and did that. Okay, so out of the 19% last year who said they were thinking of selling, 12% did. This year, the survey showed that 38% of investors were thinking of selling in the year ahead, and that's mind-boggling. That's double, literally double of last year. And then if we're sort of saying, well, 2/3 of the people that said they were going to sell last year did, if you look at 2/3, we're talking, that would be, I hate to think the impact of that, and again, we asked the investors, what are the reasons that you would be selling, and it's the same reasons as they've already sold, which is just the changing policy levers, the increases of taxes. In the last 12 months, clearly we've had the new Victorian land tax instigated, which would make many investors have to pay land tax for the first time in their lives, and that might be the straw that breaks the camel's back, or already has been. And look, we saw that last year with the Queensland interstate land tax. Yes, there was an industry campaign against it because it was appalling policy, but the consequences of that policy could have been catastrophic. I mean, obviously things in Queensland are still pretty bad, but at least they saw the good sense to repeal that. Not a lot of, legislation doesn't get repealed very often. They don't like to admit that they might have made a mistake. But, Queensland, at least, to give credit where it's due, the government did listen to the industry, did respect a variety of data sources that were coming out here in Queensland, and acted in the best interests of the rental market, which is investors and tenants. The one can't exist without the other. Geez, it would be nice. It would be nice to think that the Victorian government might consider, adapting or I don't know. I mean, clearly they're trying to fill the bucket that was, spent during COVID. But it would be really nice if they recognised the same as the Queensland government did last year, which is a punitive tax, a punitive additional cost when investors are already struggling with, significantly higher holding costs, passing on a very small percentage of those holding costs to investors, to tenants, our survey found. Yeah. So unfortunately, as we sit here, it's not looking good. If 38% of investors are thinking about selling still, wow. Good Lord knows what our conversation will be this time next year, Bushy.
Absolutely. I think some of the standout concerns that I picked up from the read of the survey myself were, nearly 70% concerned about the threat of rental caps or freezes. There was the other number that sort of stuck out to me, just under 70% expressing concern about the growing negative public perception of the role that investors are playing. Now, that's a big concern, I think, moving forward. And the other thing too, what stood out for me was that nearly half of the respondents indicating that if governments further increase or introduce new taxes, they'll be forced to increase the rents. So, you can't penalise one end without having a flow-on effect. So I think there needs to be a much more holistic view by governments at all levels around this to see and to look at the inconsequential or unforeseen impacts that some of these measures are having. So that's all good. Now, sort of still focusing on the trends piece and the shifts in sentiment, have there been any in relation to the good old preference between city versus regional investment locations that came out of this year's survey?
Yeah, definitely. And I will have to refer a little bit to my notes because, as I say, I don't even know how many stats we have in this report. We over the years, we always ask investors where they think, have the best, the best investment prospects for the year ahead. And we did start to see that shift to regional locations during COVID, physically, and investment dollars as well. But the last year's survey found 56% of respondents felt that metro markets offered the best investment prospects, which is really unusual. 56 is quite low, right? But that's obviously a reflection of the hangover from COVID and the regional migration. This year, though, a staggering 74% said one of the capitals offered the most appealing prospects. So, look, we are moving back into probably more long-term data that's reflective of what normally happens, because during COVID there was a lot of things that happened that don't normally happen, and we're unlikely to see them again in our lifetimes, or God willing, unless there's something really bad that's happening. So we are starting to see investors sort of recognising that metro markets, they're feeling that that's the best investment prospects. What was really interesting, though, and I'm not too sure if this is another question, I'll just throw it in here. Oh, you've got it there. I'll just go to that in a segue of myself. It was about the change in the locations where investors were thinking were the best prospects.
Yeah.
Do you know what? I was doing some research on this the other day for a journalist. I have a feeling, so we've been running the survey since 2015. I have a feeling it's the first time that Brisbane hasn't been number one.
I think you're right.
Because I was going back through every time we've asked this question since 2015. And Brisbane's always up the top, man. It's always up the top.
Yeah.
Probably affordability, lifestyle. We have a lot of interstate migration. We actually probably have, a large percentage of interstate investors as well. So, but this year it was Perth, number one. And Brisbane was at number one with Perth 25% and Brisbane at 21%, 12% tipped Adelaide.
Yeah.
What's really interesting though is that Brisbane was 58% in 2021. So around about that in 2021, about 58% of respondents said that they thought Brisbane by far and away. It actually got from a media point of view, we were always kind of like, well, we're always saying the same thing about the stat, So you can see how the mighty have fallen, right? Went from 58% and now it's 21.8. But also in this other research that I was doing, only 4% of respondents picked Melbourne as having the best investment prospects. 4%. This is our second biggest capital city. And then when I was doing this research the other day, it's actually fallen. I think that its peak was around about 27% in about 2017, in our 2017 survey. The peak was about 27%, and now it's 4%. I mean, it's almost as bad as Darwin. So that was just mind-boggling, man. And again, I mean, Brisbane's still in favour because, look, and do we agree with that sentiment, right? This is what people believe. When I look back over the data over the last 9 years, hardly any investors had any sentiment for Hobart the whole time. And you know what? They really should have. So this is about how investors are thinking and feeling about a place. Doesn't necessarily mean it marries up with what would be sound investment strategy, because do we really believe that Melbourne doesn't have sound investment prospects? No. But because they don't feel that they're welcome there, that is an indication that they're not going to bloody buy there. And they're borderless, like you've said. And a lot of people, as we already know, have been buying in Perth for a while now. Brisbane is hard, the state government, like, oh, well, Brisbane's still very popular. You're like, well, it is, but it's half as popular as it used to be.
Spot on. And this is the important message, I think, is the impact that sentiment is having on people's actions and decisions now. And a lot of that is fed in through the mainstream media, obviously. But to see such dramatic changes that you've just illustrated there, it's pretty telling for state governments in relation to the messages they're sending out there and the likely flow-on effect that's going to have.
When we come back, Bushy asks Nicola about the impact an investor's sentiment has on the type of property he or she feels will give them the best result. New, established, house or unit? After this short break, we'll find out what Nicola McDougall from Pippa believes, and that's based on the results of Pippa's investment sentiment survey released earlier this month. This is Realty Talk. Bushy back in just a moment.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote.
Can you give us a bit of a feel for what properties investors and what types of properties they're looking to buy in the next year?
Look, every survey we have similar type of metrics that come out of it, and about 2/3 of the survey respondents have indicated that they'd be looking at buying a house. So that continues to be, the preferred investment dwelling, I guess. Look, becoming increasingly difficult to be able to afford one of those things. And we are starting to see investors, in greater numbers purchase, attached dwellings, whether it's a townhouse or an apartment. And thankfully, it does, because, some investors, they really, they like to buy established property. Some investors, smart investors, buy good new dwellings as well. We don't have a preference, whatever suits you is what suits you. But what I have noticed over recent years, which is good, is that developers seem to be responding, this whole investor stock stuff. I mean, yawn. Talk about, and whilst there might be a very, very small percentage of investors who might be keen on, something that's quite crap and cheap, the majority of investors, if they're smart and working with PIPA members, are wanting to invest in something that's going to have capital growth over the years. And that can happen, for any dwelling. Whether it's existing or it's new, as long as you've purchased one that is ticking all the boxes that it needs to tick for that location now and into the future. So I have noticed that developers seem to be a little bit more responsive to that. And what I really also am seeing is people choosing, more for homeowners, I guess, that people choosing to live in apartments as a first choice and not as second choice. I've lived in apartments my whole ownership. I don't just own apartments, but I live in them. It's small and it's a small block, but because I don't like gardening, I don't like doing the lawn, but also I travel a lot and I have a busy life and I like to lock up and leave, and so we are starting to see, I think, that evolution of sentiment as well, sentiment in regards to where people want to live and why they want to live there, instead of like just, oh, well, I need to buy a house. Well, if you can buy a house, that's great. But for many people, it won't be affordable either as their home or as an investment until many years later, when they've hopefully, been in the market for a while.
Yeah, I'll be very interested. There's been a lot of hullabaloo being made in the press about the whole build to rent exercise that the institutional investors are starting to leap into. I've sort of got mixed feelings around that in the context of whether it's actually going to assist the rental situation, because my understanding is that those sorts of developments are focused more at higher end.
It'll be interesting to see what price point that they can offer them at, because they're not doing it for free. They need to make a profit. However, I did actually watch a really good show about this recently, and it explained it very well. And I suppose in a way, when we think about the fact that if a whole building is leased to tenants, and and I think some modelling is that it's like that way for 10 years. Right. So tenants aren't going to have to move because the owner wants to renovate it, because they want to sell it, which is their right, So in that respect, that stability of supply will be created. I was the same as you, Bushy, but I did watch this show about it, and I feel much that I understand it a lot more. And even if we think about it like that, as long as it's good product, obviously, how affordable it's going to be, we don't know. But there will be that stability there for tenants that don't exist in the private market, because that building will always be for renters for 10 years, and they won't have to move because the owner, rightly so, wants to do something with their property, because there's only the one owner. For that whole complex. So don't know if that's a complete segue or if that's helpful, but it was kind of like when I was watching the show, I had this little, I kind of understood it a bit better now, because it's very new here. It's not so new in other countries around the world.
Yeah, absolutely. And thanks for sharing those thoughts. Well, sort of coming back to the sentiment in overall terms that's emerging from the survey, if you were to sort of sum it up, what's it indicating generally, Nicola?
This year's survey showed about 55% of respondents believe now is a good time to invest in property. 55%. That sounds pretty good, right? It is down slightly from last year, and it is down from 62% in 2021. So we are starting to see, that declining sentiment among investors. Next year will be interesting to see where that is. I think it'll jump up again. I think that is a reflection of market conditions at the time. And clearly we've, in the 12 months to August, we had, the record increases in interest rates in 18 months, but also fairly benign market conditions or falling market conditions in many places that only really started to uptick over recent months. So that's probably a reflection of the fact that all of our expenses have gone up and our prices have gone sideways. That doesn't make you, jump around with joy, does it? It just kind of goes, oh, well, and those of us who've been doing it a long time just kind of go, oh, well, we'll carry on. So the sentiment there is much cooler than it was in 2021. But if we think about 2021, markets were booming, obviously, and 62% of survey respondents said it was a good time to buy. Those of us who've been doing this a long time, Bushy, when things are booming like that, I would suggest that it's not a good time to buy because you should have bought the year before when things were not very good.
Yes, I'm a closet contrarian in that regard.
Me too.
No doubt about it. Now, really good thoughts. Well, it's sort of bringing it all to a head then, sort of summarising the whole exercise. What are some of the key messages and implications that are emerging from the survey that our policymakers, governments and the mainstream media need to be paying attention to, do you think?
I mean, here we have, a data set now that didn't exist before. And we've tracked it over the last 3 years, and clearly it's showing that investors have, offloaded their properties in record numbers. And not only that, they've actually been stripped from rental markets because it's been home buyers and homeowners that have bought them. I think, as we said during the show, this is, we believe one of the reasons why we have the current rental crisis. The rental crisis, though, it actually started, the warning bells started in 2015 when APRA made those lending restrictions and investors weren't able to access finance. And we can certainly see from ABS data the investor lending just fall off a cliff, like free fall from 2015, and it kept on going, and this is when we had, before COVID, we still had really low interest rates, but even with low interest rates, no one could get any money, or if you're an investor, and that was in free fall until 2020, and it's only just started to sort of get back to those historical averages. So it's clear that investors, look, and I don't think that investors should be selling if they can hold. I always believe in a long-term mindset. Don't react to something that's happening in the short term. Politicians come and go. The threat of policies come and go. The key is to hold for the long term and ride out the peaks and the troughs. However, that's easier said than done. And for many investors who generally only own one property, that's not possible for them, or they get spooked. It doesn't take much to spook them. And this is clearly what's been happening over the last 12 months with all of those policy changes, as well as increasing taxes. I've been thinking about this over the last few days. It would be lovely to see fewer punitive policies, attacking investors who, let's be honest, supply the vast majority of rental accommodation in this nation. I would like to see proactive policies that respect the vital role that investors play. And as you probably know, I was in Canberra last week and I was meeting with the Shadow Housing Minister and had a really good chats, actually. But, when I sort of suggested to him, it would be really nice to, have proactive policies that encouraged investors to come back into the market, but also motivated them to stay for the long term. And we had a bit of a chat off camera about that, what that might look like. We don't know yet, but that's vital, right? Instead of these always these financial attacks on investors, how about actually going, wow, like while governments around this country have reduced their funding of social housing from 10% of housing supply to less than 2%, while they've been doing that, and investors have been picking up the slack, whilst at the same time getting increased taxes levied on us left, right and centre. I'm sure I've said to you before, Bushy, I still cannot get my head around why investors pay more stamp duty. Stuff like that, higher council rates, everything. Why higher interest rates? All of these things. Why is that? Why is that? So I would like that to change. It's obviously a utopian idea, but we need to incentivize investors to get back into the market because they haven't been, and obviously a lot of them are leaving. So how do we incentivize people to become investors? And importantly, how do we incentivize them to stay for the long term? And when I say long term, I'm meaning decades, so that we can create that stable supply of rental accommodation in this country, because we don't have that at the moment.
Beautifully said. And I really want to thank you for this very revealing and very insightful run through the survey, Nicola. And it, as you just said, it further reinforces the need for our policymakers and governments to actually reframe and reverse their thinking by stopping treating investors as the enemy and the problem by penalising and then hamstringing them to the detriment of the housing supply and rental affordability. And instead, as you well just said, to start embracing them as their best friends and actually the solution by re-incentivising them to continue to invest as the only meaningful way that the rental crisis can be sustainably addressed. So I just want to point to anyone listening to this, if you want to learn more and to get the details of the survey, just jump on www.pippa, that's pipa.asn.au, and check out the Pippa Annual Property Investor Sentiment Survey 2023. And Nicola, I just really want to thank you again for sharing these very informative and very timely insights here on the show.
Oh, thank you, Bushy. Thanks for the opportunity.
Property depreciation is the natural wear and tear of a building and its assets. Property investors can claim depreciation as a tax deduction each financial year. Depreciation is a non-cash deduction. This means you don't need to spend any money in order to claim it. On average, BMT tax depreciation fined residential investors almost $9,000 in first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote.
Subscribe now to Realty Talk. It's out every week.
Well, that brings us to the end of this week's show. A big thanks to Nicola McDougall and the Pippa team, as well as Bushy, for helping us understand more about the outcome of the most comprehensive snapshot of the nation's property investment community. Make sure you don't miss a single episode of Realty Talk or Bushy's Get Invested podcast delivered to you each and every week. You'll do that by subscribing to the Property Hub now on your favourite podcast player or wherever you're listening to or watching this show. Thanks to our supporters and content partners, realty.com.au, BMT Tax Depreciation, Know How Property Finance, Get Rare Property and Apiro Marketing. I'm Kevin Turner, and on behalf of Bushy and the Property Hub team, we look forward to seeing you again next week.